May, June 2018, this was this year's first semester paper. The key is always to look at the structure which is given here, the proposed timetable. You're not forced to start with question 1. If you don't like question 1, you don't have to start with question 1. Good exam technique is to pass the exam, then get to distinction. So if you like question 5 and you feel very confident with correspondence, start there, complete it, finish it, get the marks, and then move on. Looking at this, I can see that question 3 is the easiest question here. Why? It's the lowest amount of marks and it's the shortest amount of time. So I would probably start with question 3. It doesn't matter what order you do the questions in, as long as you do all the questions in the 2 hours. So first objective, pass. Make sure you don't repeat the course. No one wants to waste another 6 months doing the same course. Right, so your first objective is to get 50%. This is out of 100, 50 is going to pass you. If I do this question, VAT 13, I've already got 13 out of 50. I need another 37 marks from all the other questions, and that guarantees a pass. Right, so that's good exam technique. I'm going to start there with question 3. Why? It's the easiest, it's the shortest, it's the easiest. So let's start with that. Okay, so let's scroll down to question 3. There we go. And you can see this is actually theory even, looks like it's. Question 3, 30 marks, 15 minutes. Complete the table below. Assume that the invoice basis for administering the value-added tax applies and that all suppliers are on a valid tax invoice where applicable. Complete. They've done the first 2 for you. Income or receipts. Example, receipts from clients for the statement of their accounts. That's an income. Is this a supplier of services? Yes. They've said no. Receipts from clients for the settlement of the settlement of the accounts. Yes. Yeah, but let's look at them. Settlement of accounts. A settlement of an account would be this: debit debtors, well, bank, credit debtors. That would be a settlement of a outstanding account. Okay, asterisk, no VAT here. Just to revise, VAT input, bracket, when buying, VAT output, when selling. That's theory that you would study, and remember, obviously that wouldn't apply here for a receipt. The second one was entertainment. Obviously entertainment is not a good expense for a business to have. Okay, it might be nice to take the staff out and to treat them, but SARS isn't going to allow you to claim the VAT on that. So if you take the staff out for a nice lunch and you get the bill, and the bill has VAT on that specific bill, you're not going to be able to claim it. Right, then they've given you a few others. So let's look at this one, number 3. I'm just going to write them here. So question 3, answers are here, completing the table. I'm just going to write down what they gave you, and then I'll write down the answer for whichever column, but I'll tick it here so you guys can see it. Interest received on client/debtors/trade receivables accounts, brackets, financial services. Interest, brackets, on debtors/other. Okay, that you can refer to the question in the actual past paper to see what it is. Okay, is it income? Yes, it is, so that's in that column. Is it the supply of services income for taxable? Definitely not. Can input VAT be claimed back? There is no VAT applicable here. So is there a better option? Can input VAT be claimed back? No. If your answer to column C or D is yes, indicate which VAT must be included. So that's obviously C and D. Did they label these columns? Yes, they did. Okay, so C and D. If yes for either or, it's no for both. If your answer to column C or D is no, explain why. Okay, so it's that column. You would tick it, you would write something in there. This is what you would write in. Right, interest is exempt. It's an exempt supply. That you'll just study from your notes. Think about it logically. If the bank is going to charge interest, let's say 20%, if the receiver of revenue had to charge an extra 15%, that's going to kill the person taking out that loan. But now, all of a sudden, from 20%, it's now 35% because they need to pay an extra 15% for VAT. Right, so SARS understands that, and that's why they exempt interest from VAT. Interest is exempt, no VAT will be applicable to these interest income items. It doesn't matter what interest. It can be interest on debtors, interest on trade receivables, interest on the favorable bank balance, interest on whatever. Makes no difference. VAT wouldn't be applicable there. Fuel supplied to article clerks. Right, so fuel has a special levy. It's called a fuel levy. Fuel doesn't have VAT. Fuel is zero rated. Again, that's just theory. Here, they've put this in income/receipts. I would disagree with this. I would put fuel supplied to article clerks as an expense. Okay, but we don't have to change the question because the question is the question. But to me, that doesn't make sense because you're not selling fuel. And obviously, you're looking at a law practice. But I don't know of a law practice that also sells fuel. Maybe it's possible, but no. That seems quite unusual. Right, so for me, fuel would be sitting in the expense column because you're buying the fuel and you're giving it to the article clerks to use to maybe travel to clients or to do their work. Right, but that's a whole different consideration because then the article clerk could probably include that as like a fringe benefits. Right, if you're getting a travel allowance or a company car or some sort of perk, that's not part of that. That's a different section in the Income Tax Act. Yes, that's important, but yeah, I mean, if we're just looking at it from a fuel point of view, it's an expense that the business is obviously incurring. So if the article clerk incurs it and then they claim it back, then that's obviously just the back office stuff. But the point is, fuel, zero rated supply. So there is VAT here, but the VAT is at 0%, meaning the petrol station can still claim input VAT on all their expenses, right? Because the petrol station would have to pay for maybe rent, they might pay for equipment, and those items, those assets will have VAT. So VAT applicable, but at 0%. Exempt, there is no VAT whatsoever. It's null, it's not applicable. Right, zero rated and exempt, they're slightly different. The one has VAT, but at 0%. If you're looking at columns, is the supply of services or income a taxable supply? Supply of services or income. This isn't income, but it's in the income column. Can input VAT be claimed back on the item? I would say yes here, definitely. Okay, tick that one. For me, fuel supplied to article clerks isn't income. That's why I don't want to tick this one. Okay, because it's an expense. If your answer to column C or D is yes, then indicate the rate, 0%. And if you wanted to explain it a bit more in detail, you could maybe write that there, and you could say input VAT is claimable, but no output VAT on the sale of fuel. But it's possible that maybe they thought this was a different business, not a law-specific business, and that's why they've put it as income. But those two columns would be correct, 0%. Okay, legal fees rendered to a client. VAT is levied on goods and services. So if you're rendering a service to a client and you're a registered VAT vendor, you would have to collect 15% VAT on those services that you're providing them with. Is this supply of a taxable supply? Definitely, so tick that one, yes. Can input VAT be claimed back? There wouldn't be input VAT here, it would be output VAT. So I would say no for that one. I would say 15% for this. Oh, you guys still use 14. So they'll probably mark 15 wrong, even though 15's right. Okay, so you guys would have you would have to have used 14. Yes. Okay, the world we live in uses 15%, but UNISA's testing the past, so put 14% in. Okay, if your answer is column C or D, those two, explain, and no, explain why. Okay, we don't need that. Just to add some more, you probably don't need to, but I want to, just to do some revision as well. Okay, fees to clients, normal operating, inverted commas income, okay, bracket, this would be a service that would attract normal standard rated VAT. VAT at 15%, obviously use 14 when answering this. Next, purchase of a delivery van, Bucky. This would be input because it's an expense, so that's good. Is this a taxable income supply? Obviously not, so nothing in that column. Can input be claimed? Definitely, yes. What would the rate be? 15%. And let's explain it a little bit in more detail. So, delivery vehicle. Hi, Gemma. Not a problem. No, this is not mine actually. It's one of the students. Yeah, it's Stephanie's. Yeah, Stacy's. Sorry. Yeah. Okay. Right. So delivery vehicle. If I'm buying a delivery vehicle, standard rated. 15%. It's a VAT input line item, and that's the additional. Okay, so you guys can include all of that here in terms of understanding. You probably don't need to though, because we've answered it. We've either ticked yes or no, and we've indicated the rate. That's all they wanted. No explanation, unless you said no, which is the last column. Right, salaries and wages, that's an easy one. Salaries and wages fall outside the scope. There's no VAT on salaries and wages. Okay, no VAT whatsoever. VAT does not apply. Other taxes are levied on salaries and wages. Other taxes apply. That's beyond the scope. PAYE, pay as you earn. That's called income tax, and that's a separate act. Okay, you don't need that level of detail. All we need to do is tick a column, yes or no. Is the supply of that would definitely be a no. Can input VAT, that will definitely be a no, and then your answer would be in the last column. Okay, so it's no for all of them. And then fill in an answer there. Okay, what you would fill in here would be what I wrote down there. Right, VAT does not apply to salaries and wages. It falls outside the scope of VAT. Pay as you earn is the applicable taxes. Okay, you could probably write more if you wanted to. I don't think this was more than maybe a mark. This is out of 13. Okay, they don't show the mark allocation, but I'm assuming that it's probably 1, maybe 2, depending. Members' contribution paid to trade unions and membership fees paid to a sports club. There's the giveaway. Sports club. Paid to a trade union. Okay, so if it's for business purposes, then it's deductible. Okay, claimable. So members paid a contribution to the trade union and membership fees paid to a sports club. Right. Personally, I think the business wouldn't pay your membership to your trade union. You would pay that. So if you belong to COSATU or who are the other big ones? NUMSA, yes. Those are more NUMSA mine workers. COSATU, more general, I guess. And then you do get others as well. As far as I know, law companies wouldn't pay that membership because not everyone wants to belong to a trade union. Okay, if you do belong to a trade union, then you would have to pay that. And that would be a, inverted commas, a private expense. Okay, so you're belonging to a trade union. So for me, because the sports club is there, that's the key one. Obviously, that's the obvious one. This tells me that there will be no VAT claimable, non-allowable expense. Okay, so I'd be looking more at the sports club rather than the trade unions. Okay, for me, as I said, trade unions, it would be voluntary. Okay, you can decide which trade union which one you would want to belong to. But now, if you're belonging to it, you're the member. Remember, the trade union is acting in your best interests, not your employers. So your employer wouldn't be, unless they're open-minded and they're willing to pay your membership to a trade union that's going to represent you, then that's fine. But to me, logic says a trade union membership would be a, inverted commas, private expense. If they're paying it for you on your behalf, then it would still be not allowable, all right, because it would be private. So let's write that in. Membership fees to, inverted commas, private / recreational / personal clubs are non-allowable, standard rated suppliers. Okay, so there'll definitely be VAT there. Okay, when you join the club, they're going to give you an invoice, the membership fee, and the membership fee will include VAT. If the company is paying your membership to a trade union and your membership to a sports club, both would be seen as, inverted commas, private membership fees, and they would be non-allowable standard rated suppliers. Okay, so your employer, the business, would not be allowed to claim that as input VAT. So if you had to tick a column here or write down yes or no, income, that would be no. Can input VAT be claimed back on the item? That would be no. And then you would use the last column to write in Y. Okay, so that'll be a no, that'll be a no, and then you need to write in an amount there. Okay, and I would write in what I wrote down here. Okay, the last one, interest paid on the business bank account. Obviously, good interest or bad interest, both interests are exempt. So copy paste the first one, except this is interest on an overdraft. So that would be interest expense, basically. Interest expense. The first one we looked at was interest income. Okay, that was good interest. This is bad interest. Doesn't matter which interest you've got. You're still going to have the same reason. Interest is exempt. And that's that. That's it. The end. Let's go back. Question 3 done. Question 3 would have been easy if you've studied and you've covered the theory. There's not a lot that we need to look at. I think maybe I didn't spend enough time going in too much detail into the VAT, but I see they have given you a bit more information here. What I spoke about was the input and the output. We looked at that a lot. Maybe just to give you a little bit more detail. Okay, VAT applies to all business, goods, and services. Okay, input VAT arises when paying or buying items. Paying for or buying items. Okay, that's input VAT. Right, you get two types of VAT, zero rated and standard rated. The standard rated is that whole 14/15%, depending on either last year or this year. Then you also have exempt suppliers. The exempt suppliers actually fall outside zero and standard rated because exempt means no VAT applies. It's exempt. Okay, so if I'm paying for expenses, so for example, if I pay for bank charges, if you look at your bank statement, you'll see bank charges has VAT. That VAT is claimable because it's a business expense. See, the key word here is business. It needs to be levied on the business's expenses. It must be day-to-day running of the business. Okay, it cannot be something unrelated to the business, outside the scope. So if they're paying for a trade union fee, that's outside the scope. It's not part of business. Same thing with the sports club. It's not part of business. It's something unrelated. Are they a sole proprietor? Yeah, the sports club is the key. But you have to be a registered VAT vendor. So if a sole proprietor wanted to register, they would have to be a VAT vendor. And then I don't know of a sole proprietor that's a VAT vendor, because you need to submit a VAT return every single month, or every 2 months, or every 4 months, depending. Yeah. Yes, but then you have to register. If you're under $1 million, then it's voluntary. Yeah, we spoke about that. Yeah, even a trade union wouldn't be something that would be a business expense. It's not business. It's unrelated. So I would still motivate it the same as we did initially. Okay. All right, let's have a look at the next bit. Right, so now you've got 13 marks. Next question, easy one. The trust investments looks quite short, quite easy to do. I want to leave 4 and 5 to the end because 4 and 5 are very similar. Okay. 1 and 2 are a little bit unrelated. Actually 2, 4 and 5 are actually quite similar. Trust transfers, trust investments, correspondence, all of it falls under the same topic. The business and the clients. The client's money, the business's money. And then either we invest it or we don't, depending. Or we transfer it to the business or we don't, depending. Okay, again, the rules would apply. So question 1, let's do that one. Cash journals, bank account, and the bank recon. The bank recon should always be an easy question. 21 marks, 25 minutes. Let's go to question 1. There's question 1. Okay, you guys are lucky because you've got the format. What do they want me to draw up? The business cash receipts and business cash payments. Okay, so I need to quickly draw up a few things here. Okay, I'm just going to label this as question 3. Okay, I'm going to use separate sheets here at the bottom. So when you get the email, just change worksheets here at the bottom. Okay, you can see I'm just using different questions here. Right, so I'm going back to question 1. Question 1, bank recon. Just to revise some basics while I draw this up. In a bank recon, you've got internal records and you've got external records. Internal means you can adjust them. In terms of your journals, your ledger, your T accounts, anything. You have the power to adjust. External records, you don't. You can't change what's in your bank statements. So this would have been a reconcile. Okay, so I'm just revising theory as we go as well. So a little bit of maybe jogging your memory or recap, either or, just so you can feel more comfortable with this. Format-wise, I'm going to stick to the format that they've given you, just so that, or do they? They don't. Okay, they don't give you. They don't. Okay, so then you would also need to draw up something similar to what I'm drawing up. Cash receipts journal. Okay, it's exactly the same as what we did in class a few weeks back. In the cash receipts journal, you're just going to have 2 columns, one for details and one for bank. That's it. You can put a date column if you want, but the date will always be the last day of the month because this is a bank recon. You reconcile on the last day of the month. Then you would copy paste this, and then you would write cash payments there, and then you would have 2 columns here as well. Okay, so receipts are good. We like receipts. Payments are bad. There'll be a total, and there'll be a T account. Bank, brackets, this is the general ledger account. Let's bold that. Right, then you've got external records. What's on the left stays on the left. What's on the right stays on the right. You don't reference anything. It's completely separate. Your books are your books, the banks are the banks. On the right, you have to have a bank reconciliation statement. And a bank reconciliation statement has 2 columns, one for the debits and one for the credits. 2 columns. Okay, so format's important. Don't worry if you waste 2, 3, 4, 5 minutes even drawing up the structure. Get the structure right, and you check that with your required. The required gives you the scope. Business cash receipts, I've got that. Business cash payments, I've got that. They tell me bank columns only. Properly totaled, obviously I'll total it because you can't do a bank if you don't total it. And then the bank account in the general ledger, that's the T account, so I've got that. And the bank reconciliation statement, you've got that. And that's everything. There we go. Now we're ready to approach the question. Let's look at what they've given us. Okay, this is a little bit different to some of the examples we did in class because I actually gave you a physical bank statement and we did the process. The textbook also does the same thing. They give you like a bank statement and you check it. Here they've worded it. So they've done the comparison and someone has described the differences. That's how they've given it here. There's always easy marks in every question. First paragraph talks about the totals for the cash receipts and cash payments. Business cash receipts, 67,700. You know that we need to start with something. 67,700 is the starting total for the cash receipts journal, given in the question. Tick, I've looked at it. Bank cash payments journal, 44,260. Same thing, start with something, 44,260. There's the starting point for my journals. Easy marks. Okay, the amount that you have in the question get posted straight to the journals. On comparing the business bank statement with the business cash receipts and cash payments, the following were noted. So these are discrepancies that were raised by the accountant or the bookkeeper. Number 1, on 1st May, the bank account in the general ledger showed a favorable bank balance. Easy mark. All of you should know that a favorable bank balance represents an asset, right? Bank is an asset. Assets have debit or credit balances. Debit balances. So 2787 is going to go here. 2787. That was the opening balance for May. 1/5 balance brought down. There's another easy mark. Opening balance for your general ledger T account. Let's go back, tick it, move on. On 31st May, the bank statement showed a favorable bank balance. Remember we spoke about this when we covered the theory. Do you like seeing debits on your bank statement? No, no one likes a debit order. So just remember that. Now you know that a credit is good. A credit is good on the bank statement. So if it's a favorable bank balance, it's a credit balance. That goes here. Balance as per the bank statement. How much was it? Let's go get the figure. 7,500. 7,500. That goes there. On the credit side. Why? Favorable. You're looking at the bank's record. Okay, tick that, move on. The following appeared on the bank statement but not in the cash journals. If they're in the bank statement and not in the cash journals, adjust, reconcile? Adjust. Because your records don't have those line items. Okay, so remember, you don't do both, it's one or the other. You either adjust or you reconcile. I'm going to adjust because I don't have these figures in our books, right? The service fee is a payment, so let's record that. And the service fee was 572. Tick. Internet banking fee 125. Internet banking fee. Tick. Deposit book fee. Tick. A deposit of 8520 from R, a client, paid directly into the bank account of Nkumi attorneys for the fees charged. Okay, that's a direct deposit. It's sitting in the bank statement. Adjust or reconcile? Adjust. It's in the bank statement. It's not in our books. It goes here. Nkumi, client, in brackets, for fees. You can even write fee income if you want to. I would think that would be fine. Okay, I like to use what's in the question, so I would add even more here, maybe fee income. You could even use that. If you've got space, you can add as much as you want there to be more specific. Are we Kumi? Oh, sorry, wrong person. Yes, wrong name, Blue. Okay. Tick, move on. A debit order 560 for insurance. Insurance, adjust. You don't have it in your books. 560. Tick, move on. The following checks did not appear on the bank statement. If a check does not appear on the bank statement, okay, it needs to be in the recon. Why? Your books have it. The bank doesn't. All of these. This was 1st November 2016. November 2016 is a long time ago. Do you guys agree? Okay, so that one probably has additional information, and it does. There we go. Check number 320 to attorney Gabordo is stale and must be cancelled. There's the key word. Stale checks you can always study, and remember, stale checks always go to the cash receipts journal. So let's record it. Stale check 320. How much? 3168. Then we've got all these others. This was also December. This was December 2016. Was there anything written about that check? No. Okay, so we can assume that's still outstanding. So those three are still outstanding checks. That would go to the bank recon, outstanding checks. Here you can just write the check numbers. That should be okay. Or you could write more detail if you wanted to. I'm going to keep it simple and just write the check numbers in. Okay, the checks will be debited eventually when they go through. 4250, 1180, and 2700. There we go. Tick all of them. Next, number 5. A deposit 8856 for another client of the bank was erroneously entered on the bank statement. So there's an error on the bank statement. You shouldn't have a deposit anywhere in your records. Okay, you don't. The bank does. It's a bank error. The bank needs to fix it. Adjust, reconcile? Reconcile. We don't have to do anything. Okay, you shouldn't have this check in your records, so don't adjust. The bank has it in the bank statements. They made a mistake. You would go to the bank, you would complain, and you would say, well, why did you debit my account? This is not my check. And what are they going to say? Sorry for making an error. We'll reverse it out next month. Your next month bank statement will show the right amount. Make sense? Okay, Okay, I'm just trying to revise as much theory as I can. We've covered this, so it should ring a bell. Bank error, and the bank is going to credit your account because initially they debited it. So they'll say sorry and they'll reverse it out eventually. Tick. Next. A check for 5794 drawn by another client of the bank was erroneously entered on the bank statement. Oh, hold on. This was a deposit. So actually, you wouldn't mind that error. Okay, so yeah, let's change this deposit bank error. Let's be specific. Bank error deposit. Okay, then the bank error. This is check. Okay, so you wouldn't really mind seeing an extra 8856 in your account. Okay, that's kind of what happened. Someone else's money sitting in your account, but obviously the bank is going to reverse that out. So we just need to change that column. It's 8856 there. Right, the other one you would mind. Okay, if you see someone else's check in your bank account, then you'll complain. Okay, both of these errors will be reversed out by the bank eventually. So this one will actually increase your account. 5794. 5794. 5794. Great. Okay, so now that's right and that's right. Yeah, just be careful. I needed to focus on the word deposit and the word check. Those are keywords. Number 7, a deposit of 38,450 dated 30 May did not appear on the bank statement, so that's an outstanding deposit. That goes over here. Outstanding deposit, and that deposit is for 38,450 on the credit side of your bank recon. Tick. The last one. Promise a client made an EFT of that amount as payment on his account. The bookkeeper incorrectly entered the amount as 5320 in the business's cash receipts. Right, so you've recorded a receipt that was 5320, which was too much. You should have recorded less. How do you correct an overstatement of a receipt? By processing a payment. Okay, if you process a payment, it's going to reduce that 5,320. Okay, that's the tricky bit in this question. So let's show that. Here, we're going to write error, bracket over stated deposits. Okay, the difference will be the amount that we will include there. 5320 minus 3520 gives you 1800. And that's it. The end. Just double check. Yeah, that's the question. So we need to wrap up. Total up everything on the left of your cash receipts and the right for your bank for cash payments. Sum up all of this. Sum up all of that. Okay, receipts increase your bank account. So 30th of the 5th, total receipts, CRJ, equals that figure. On this side, total payments. Payments decrease your bank accounts. Bank is an asset. Assets decrease on the credit balance equals that amount, 47417. Right, then you need to balance off this tier account. Which side is bigger here? Well, I can see 79,000 is already bigger than 47. So I know this side is bigger. I sum up those two amounts and I write down that total. 82,000 is bigger than 47. So I'm going to write down the 82 on both sides. Then I need to find the missing figure. On the right, on the credit side, I'm missing a credit. The missing credit will be the difference. 82 minus 47 gives you the 34, which is the balance brought down. Carried down, brought down. 30th of the 5th, balance carried down. 1st of the 6th, balance brought down. Carried down, brought down. Okay, now obviously we're going to be hoping and checking that this coincides with what's on the right in the bank reconciliation statement for the month that we're looking at here. Okay, May. Right, so let's look at this. Which side looks bigger here? That side looks bigger than this side. So total up the credit side, add up all the credits, add up all of that, I get that total, 51,744. That would be bigger than those amounts. Okay, if I quickly add up there, if I just move this across, you can see this total is only 16,986. Okay, so if I sum up those figures, I don't get more than 51,000. 51,000 you write on both sides, then you fill in the missing figure, balance as per the bank general ledger accounts. And how do I get that figure? I take the 51 and I subtract all of these, the sum of all of them. Let's hope. Yes, it's correct. Good. If it isn't, then we go back and we check and we see what did I do wrong. Okay. 21 marks, 25 minutes. I don't think that took 25 minutes. It didn't. Okay. Right, so you do have enough time in the exam. Don't feel rushed. Just work carefully, work accurately. Right. The worst thing that can happen is you rush through this, it's easy, and then you make a mistake, and then now you got to go back and either find the mistake or redo it, and then you're wasting time. Okay, so work systematically, slowly, carefully, accurately. Think about each line item. Notice I read it line by line. Line by line. Recorded it, adjusted it, or reconciled, depending. Okay. Right, and that's how you do that question. So now we're sitting with 34 marks. Okay, so things are looking quite good. We're on our way to passing this course. We need another question or another 2 questions, and then you've probably passed. Okay, then you're going for that distinction. Okay, I'm just going to do 2, then 4, then 5, just in order. Okay, I'm not going to look at the short one. You can jump around if you want to. It's totally up to you. I'm not. I'm just going to do 2, then 4, then 5. Okay, so let's go to 2 now. Okay, 1 is complete. Let's move 1 to the front. Let's put another one here, question 2. Let's move question 2 here. Okay, let's put a heading for it. Question 2. Let's underline it. Let's save, and it starts. Okay, this one's out of 23 marks. This is out of, 23 marks out of 128 minutes. That's the time. Okay, trust transfers. Scroll down, let's have a look. There's it. This question must be answered by all students. Question 2, commence this question on a new page. The following information for the month ended, 31st of August, relates to B attorneys. Okay, you've got all these balances. That's a trial balance. Okay, good exam technique, scan it, get a feel for what they've given you, right, and then look at the required, and then come back, and then see, and then see what we need to do next. Okay, take that, there's a spare copy. Thank Francis for making an extra. Okay. Alright, so the trial balance, those are all the balances. Then I've got additional information. The following totals appeared in the subsidiary journals. Okay, so journals are given. Obviously, journals would be needed if you had to do a ledger. Okay, the accounting cycle is very specific. Transaction, source documents. Source documents are recorded in the journal. The journals are then summarized and taken to the ledger. Right, the ledger is what's used to draw up the trial balance. And then the trial balance can be used to make up financial statements. Okay, you guys don't have to do financial statements. Before they did, you don't. So that's out of your syllabus. Okay, what is the required asking you for? Open the following ledger accounts in the general ledger. I like the general ledger, so for me, I would choose this. Okay, if you were given an option. You guys said that sometimes they say you can use the one or the other, right? Was this a choice or not? Okay. So you can either calculate the amounts that should be transferred by completing the table given on page 8, on the exam paper or by compiling the ledger account on page 9 of this exam paper, as it will appear in the accounting records. Please note, show all calculations. Okay, so required, A, open the following in the ledger account. That was for 10. And then B is for 13. Okay, so you can do either or. Well, B is the choice one. A, you have to do. Okay, so let's draw up A. A is looking at the trust bank and the client control. Those are the only two T accounts that I need to draw up. 5 marks each. They said, please note, all accounts must be properly balanced. Balance means I need to total up. Commence the general ledger accounts with the opening balances as given in the trial balance above. Great, so let's look at that first. They say post the subsidiary journals in additional information 1 and 2 above to these ledger accounts. Okay, so let's create our answer for A T account. Let's make it big. Let's increase the size a bit. Might be a bit difficult to see. Let's use 4. There we go, that should be enough space. Side of 5. First one, trust bank. Okay, this comes straight out of the question. It's the required. The required gives you the structure. Okay, so you scanned the question. You knew what they were giving you. Okay, I knew this was like a trust question. I saw journals. I saw a trial balance. And then I looked at the required. The required one's 2 T accounts, one for the client control and one for the trust bank accounts. So let's go back to the top and let's get the easy marks, opening balances. Okay, I don't know if you guys can recall when we did this, not last week, the week before, we did separate client control accounts for all the separate clients. Okay, I had client 1, then client 2. Then I had trust creditors 1, trust creditors 2. I had all of them separate. Right, am I going to separate it for this particular question? No, because the question said client control. So that means everything, all of them. So I'm going to use totals here. The trust bank account, let's get an easy mark for the opening balances. I'm going to need this, and I'm going to need this. That's it. From the trial balance. Okay, so obviously I need to grab my calculator and I need to do some adding here because I need a balance. And then the trust bank, I'm just going to put it in as is. 6,390 is going to go here. 6390. What month was this? This was July. End of July. 1st of August, correct. Okay, there's the easy mark. And then client control. Just to recap, a client control is similar to debtors. Okay, that's what you're thinking about. Okay, I'm going to apply the debtors rule to the client control account because clients owe us fees that we charge them. It is an asset, so it must have a debit balance. Okay, for this, it's worthwhile showing workings just in case. Maybe you make a calculation error with the total, then you get 0. Maybe if you show the separate amounts, maybe if they're nice, they give you a half. Okay, I don't know how they're allocating marks. Let's just show it just in case. 1260 plus 1780 plus 1430. Okay, the only reason why I'm doing it this way is because they asked for 1 ledger account, not 3. That's why I'm keeping it as 1. I'm grouping all the clients into 1 account. If I copy paste that and I get an answer, the calculator gives me 4470. Tick, tick. Let's continue reading. Okay, additional information. The following totals appeared in the subsidiary journals. We need to know if any of these journals are going to affect the trust bank account or the client control. So if I look at the first one, I can see this is trust cash receipts. I definitely need that. Why? Well, if I'm collecting money from my client, the trust bank account is going to go up. Okay, more money in the trust account because more clients have given you money. Okay, there's the total. Right, for G and for P. Okay, I think it's worthwhile showing it separate. You could show it as 1. I'm going to show it as 2, just because. Okay, in the trust bank account, I would have shown 31st of the 8th, trust creditor. Because they've given it to me separate, Gushal and trust creditor Pillay. Okay, if you wanted to group that as 1, great, then just show your working. 1 plus the other. 1402, 1500. That's it. There's no need to show the trust creditors. When we did those examples in the textbook, okay, I did show the other half of the transaction. Okay, you're not required to, so don't do more than you have to, because it will waste time in the exam. Okay, only do what you need to do and think about it carefully. Okay. Perfect. So I'm happy with that. Tick. Move on. Trust cash payments journal. I need that as well. Why? The client is using the client's money to pay for the client's expenses. Okay, client money doing something for the client. So that would decrease the bank account, the trust bank account. So that's going to go on this side. Maybe just put in the CRJ here and the CPJ there. Okay, just so you guys can see the different journals. This is coming from the receipts journal. Let's put that in green. Then we're going to copy paste this. It'll be the payments journal, not the receipts journal. And that'll be a payment out of their money. How much? Here, 3570, 3570, and 2000. Again, if you want to, you can group this as 1, but if you do, then please show the working in case, just in case. It's better to show it separate, but you never know. Okay. Right, the next one, business cash payments. This would affect the business's bank account. Don't need it. And there's no clients here. Okay, no client control, so don't need this one. The fees journal, this I need. Why do I need it? Because I see this, the client control. That's why I need it. Okay, so you're charging your clients fees, and then later they'll pay you. Okay, you'll get a receipt. What is that going to do to your client control account? If you're charging them fees, it's going to increase your asset, right? Keep it simple. Think about it in an asset form. So G and P are paying us, not paying us. We're charging them. Okay, they're going to pay us in the future when they pay us their fees. Okay, those change. Okay, I'm just using that just to save time. Client control. Okay, and then the same thing here, client control. No, you can't write client control and client control. Fees. Fees income. Okay, because this is the client control account. This would have been from the FJ fees journal. FJ fees journal. Amounts, let's get them. 2520 and 3250. There we go. Okay, then we've got another journal here. It's a general journal, and this was for a client. Interest received. Okay, you weren't asked to draw up an interest tier account. You weren't asked to do a individual client account for SOA. Okay, but because there's client here, obviously SOA would have had their separate account. Okay, I would have affected his account. Okay, but I don't have his account. I have everybody's account. So only because this was everybody's account would I include this as well. Okay. So this you would include as part of all the other clients. Okay, yes, he's a separate client. He's the only client that's being charged interest. So bad client. But I don't have a separate account for him. So I'm going to add him with all the others. Okay, this would have been 31st, no, not 31st, depending on the date. Okay, they didn't give you a date for this. Oh, they said 31st of August, that's fine. Same date. Okay, the general journal could have been for different days. 31st/8, this would have been interest received. This would have been from the general journal. Great. Anything else? Let's go see. Nope, that's it. Alright, so let's get marks for the balancing. That's the easy bit. Trust bank account, client control, we would expect both to have debit balances. So if I sum up the debit side here, this side should be bigger. It is. Write down the bigger total on both sides. Then work out the balancing figure. This amount minus those two amounts give you the balancing figure. Balance carried down, balance brought down. Same amounts. And then you do the same thing here. This is an easy one to balance. The total is the balance. There were no credits here. There could be if you received money, because then you would have debited the bank and you would have credited the client control. Okay. And that's it. 10 marks for doing those 2 T accounts. Save. Okay, so now we've done half the question. We've still got half more to do. Okay, yeah, you guys will get emailed this solution. Okay, you've got all the others. Once we finish this week, I'll send it to you, so you'll get the spreadsheet, and you can obviously use this if you want to. I want to try to do as much as I can today, so if you guys are happy, I can move on. Yes? Okay. Next, B. Okay, B does give you an option. B said, calculate the amount that should be transferred from the trust bank account to the business bank account of B on 31st August for G and P after all the information given in the question above has been taken into account. You can either calculate the amounts transferred in the table or in the ledger. Okay, the ledger is always going to be easier because you just follow. We can do both, so you have both, and then you can decide which one you like better. There's the table. I don't like the table. I'll come back to it and I'll fill it in. Okay, I prefer this because you just remember your rules and then you just apply them. That's it. Okay, so here we've got the separate accounts. So this is good. Let's copy paste T accounts. Just the structure. Okay, you guys have it. You can maybe even answer it on that actual sheet. Up to you. Copy. Paste. Okay, let's get rid of all this. Okay, so we have trust, creditor, G, Gushel. Copy, trust creditor. Okay, there we go. G and then P. What else do we have? Then we've got the client's ledger. Okay, those two. Yeah, just two again. All right, so copy paste these two again. And then we need to change the trust creditors. Client control or client accounts. Yeah, let's just leave it as client control accounts. do we have here? That's it. Great. Okay, so the tier counts will always be easier because you don't have to remember what goes where in terms of all of this. And here you can just read it and then put it in, but you would still need the tier counts in terms of working. So that's why I would say just do the tier counts. You're going to get the 13 marks anyway. So make your life easy and just approach it that way. I am going to need information from here again. Okay, so I'll go back to all of this. Let's clean up the mess here. Okay, that I can actually highlight. Yeah, we'll still need that. This needs to go. Okay. Right, so yeah, you guys will need this. And this. No, not M. Just G and P. You can ignore M. Just those two. Okay, so let's put those amounts in. Client control, we need a balance. Gushal, let's get the balance brought down. Okay. How much does Gushal have? Paste. Gushal has 1780. P has 1430. Okay, there's the first two, easy marks. Balance for that guy, balance for that guy. Let's go up. Let's get some marks here. Trust control. I'm also going to need a balance. Oh, ooh, be careful. Wrong side. Sorry, mistake here. Delete. Client control is an asset account. Okay, for the trust creditors, that's a liability. That goes on this side. Paste. Okay, so let's just fix this. Okay, so we've got those two. Let's get these two. Trust creditor Gushal, how much does he have? There. We need those amounts, those two. 4760. And the other guy, 3460. Okay, those are liability accounts, credit balances. Okay, so we've looked at that, We need the journals. Okay, so I want to know if these journals affect those individual clients. The first journal is the trust receipts journal. Did I receive more money from them? Yes, I did. See, that I've already recorded anyway, okay, as a total. But I'm going to record it here again. This was for G and P. So you're going to record an increase there and there from the bank. 31st of the 8th, bank. This would have been the trust cash receipts journal. Copy paste. $1,402, 1,500. Okay, now I've looked at that. Trust cash payments, I need to look at each of these individual clients. So if it's a trust payment, it's going to reduce the liability. Liabilities are reduced on the debit side. Okay, so it'll be bank trust cash payments journal. That would decrease the liability. Trust cash payments journal. Right, how much does G pay? 3570. How much does P pay? 2000. Okay, those payments decrease the trust creditors accounts. Okay, so now I've looked at that, tick that. Okay, business cash payments, don't need. Fees journal. do need client control. Those two amounts are going to affect the individual debtors. Okay, so let's get those marks here at the bottom. Okay, you're charging them a fee. It's going to be a copy paste. Let's go up. Where's my fees journal? There we go. Copy this. Copy that. G and P. Okay, so G must get this. P must get that. Tick. Okay, the following entry was made in the general journal. This is for M and that's for interest. Don't need this. Alright, so now we've covered everything. Now we just need to look at what do we actually transfer. Okay, so the first step is to balance this account, then decide if you're going to transfer any monies through from your business bank account, from their account to your business bank account. Okay, so I'm going to add an extra total here, so we'll have two totals. Right, so let's first total this up. The trust creditor. This side is bigger, so we've got 6162 as the amount outstanding on the credit side. Then there was a payment that decreases that 62, gives you the 2592, and that'll be the balance that we would have as a, inverted commas, transferable amount, possibly, depending. Okay, so that would have been the balance, asterisk, before transfer. Okay, then I do the same thing for this one. Okay, so if I add up those two amounts, I get 4960, that's right, 4960. Minus 2 gives you 2960, that's correct. Okay, so that's the balance before the transfer. Okay, so what does that mean? If we revise the theory, okay, this means the client is still owed 2,592 cash, because that's his money that is still sitting with your business. Makes sense? Okay, same thing here. This client has that amount of money still sitting with your business. Then you need to look at the fees. Okay, so in the client control account for G, I'm looking at how much fees are we entitled to. Well, let's sum up. If I sum up those two amounts, this client owes us 4,300 in fees to the business. Okay, then you've got to go back to that theory in your textbook and they talk about all those restrictions. Obviously, depending on whether they've got enough money sitting in their account. So how much money does G still have? 2,592. Okay, your transfer would be limited to 2,592 based on the theory in the textbook. Okay, because you cannot transfer more money from the trust creditor's trust account into your books unless they've got enough money sitting in their accounts. Okay, you can't take some other client's money and transfer it to your account for them. Okay, that doesn't work. Okay, so that's the limitation, that's the restriction. So what are we going to do? We're going to show that. What are we going to do? We're going to write down credit, the client control, and then we would debit the trust creditors. Okay, this would be the client control, G Gushel. This would have been a general journal. This would have been asterisk, the transfer. Right, if they transferred the money. Okay, so the transfer would have affected the bank. Okay, I don't have bank accounts here, that's why I'm not showing the bank. I'm just showing this transfer. Okay, the transfer here would be for an amount of 2592 because you're limited to that figure. You cannot transfer more than what the client has in his own account. Okay, so that figure goes there, and then this would have been trust creditors asterisk transfer. Okay, obviously these accounts would have affected the bank. Okay, because it would have to have gone to the bank account, obviously. Okay, but you don't have bank accounts here. You just got that, so I'm just referencing it. That debit goes with that credit. Right. So do you have a trust creditor Gushel? No, you don't. His account is sitting at 0. Nothing in his account. Okay, if you want to show a balance, you can. 1st of the 9th, you would say balance asterisk after transfer would be 0. Okay, for that particular client. And then you still have a control account for him. So does he still owe us? Yes, he does. Which side's bigger? This side's bigger. So then you would have 31st of the 8th, balance carried down, 1st of the 9th, balance brought down. This would have been after transfer, obviously. Great, and let's show that amount, the net amount. This minus the transferred amount gives us that figure. Okay, so now we finished G's account. G's complete. Let's go up. Now we need to look at P. Okay, in terms of P as being a client, how much does this client still have in his account? 2,960. Okay, meaning that's an amount of money that's sitting with our business for that client. If I look at the client control, how much fees are we going to be charging this client? Let's sum up. We're going to charge this client 4,680. Again, you're limited to what's sitting in his trust account, okay, his trust bank account. Right, so again, same thing would apply here. Copy paste this, representing the transfer. That would be the amount that you would transfer, the 2,960. Okay, that is going to be referenced. This is obviously P, not G. Okay, and then in P's control account for his fees, this one, okay, we're going to have the trust creditors. Okay, this should have been trust creditors G, Gushel, okay, for the transfer. This would have been for P. Okay, and that amount would have been the same amount as there. That's correct. Good. Okay. Then we just did a balance of that account. That total, which is that total there. This minus that gives you that answer. Okay, so that client still owes us 1,720. We don't owe them anything because we don't have any more of their money. All of their money has been transferred to our account. Okay, based on the rules. Alright, so yeah, I like that approach because that didn't require much studying, right? It was it an asset or was it a liability? And then do you know how to post a journal to the T account? Right, if you do that, you get full marks. Right, so if you really want to, and you want to take this, and you want to put that into this format, you can. So I'm going to use this format as is. Where is it now? Here's it. Okay, so all I'm doing is I'm just taking answers from my workings here and putting it there. Okay, I don't know how you would do this without having to do the T accounts in the first place. Yeah, but why do you want to do why do you want to do the same thing twice? Okay, it would be pointless, right? Okay, unless they specifically said you must only draw it up as a table, then you would have to do some T accounts as workings and then just take that through to your table. Okay, but if they give you a choice, 10 out of 10 times I'm going to choose the T accounts always. Okay, so if you wanted to complete this table based on the workings that we've already got, let's complete it. Trust creditor account balance before transfer. Let's get that figure. Let's look at each one separately. Okay, there's the trust creditor G account. Okay, before the transfer, which was this, the 2592. Let's put that in. Fees and payments, no, it wouldn't go there, it would go here. 2592. Okay, let's put in Pillets as well because we've got the same thing here. Before transfer 2960. So I would have put that here. 2960. And then the total transfer amount, that will come later. Okay, trust funds earmarked for future matters or transactions. Did you have any future matters or transactions? No, you didn't. So it will be a 0, a 0, a 0, a 0. Account balance for current matters. The account balance for current matters would be that, how much you've got in the accounts. Okay, so that would be a subtotal, so we have to rewrite that total. Debit balances on trust creditor accounts to be transferred from the business bank accounts. Debit balances on trust creditors accounts to be transferred from the business bank account. There's none. We didn't transfer anything from the business bank accounts. Trust creditor account balance before fees. So that would have been the 2592 again. Write down the same figure. Fees charged, okay, that we can get. Let's go get the fees charged. Okay, here we go. Fees charged. How much fees did we charge? Well, the fees charged for the month was that figure there. 2520 for Gushal. 2520. So we charged him 2520. Okay, Pele, we charged him 3250. Okay, then they say transfer of funds in respect of fees to business bank accounts. Okay, that we've got. Transfer of funds. Let's go back. Where's the transfer? There's the transfer. Okay, 25292. So transfer of funds in respect of fees. So then you would have shown a negative here, minus 2592. Minus 2960. Trust credit account balance now, it'll be a 0 there and a 0 there. Payments from the business bank account on behalf of the trust creditors, there was nothing here. Final balance on the trust creditors would be 0 here. Total transfer to the business account 2592. 22960. So if you always have the option, just do the T accounts. But the T accounts make this table easy. Okay, you need the workings. Up to you, whichever works. Okay, if you like the table, use the table. It shouldn't matter if they give you an option. Okay, so now we did both. Let's go back. Let's tick that.